Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and following up on our video last week showing you how to pay your rent with monthly dividend stocks, how to collect as much as $2,000 in dividends to pay those bills. That video was immediately one of the most popular on the channel, but reading through the comments, you wanted one thing: more cash flow, more dividend yields, more of that opportunity for financial freedom that you only get from dividend stocks. So in this video, I'm revealing 7 more of the best dividend stocks to buy, not with an average yield of 9% like in the last video, but double that for an average dividend yield of 20%. I'll show you how to pick the highest paying dividend stocks, what to watch for, as well as some of the traps to avoid. Then at the end of the video, I'll show you a cash flow trick to increase your cash return by 16% or more on these stocks. I want to get started, but you know I gotta send a special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now for this list of dividend stocks, I'm going to be counting up from the lowest to the highest paying before revealing that trick to boost your cash flow. These 7 stocks pay an average dividend yield of 20%, more than 13 times the average yield on the stock market. And the top paying stock I'll show you pays a 27% yield. First though, I want to get your opinion on this. That last video highlighted those monthly dividend stocks to put that cash in your pocket every month and pay your bills. Most of these that I'm going to show you today though are those normal quarterly paying stocks. Now they pay the higher dividend returns, but you're going to have to wait those 3 months to get that bigger check. So now, which is more important to you though? That monthly cash flow, even if it's a little bit lower, or those much bigger checks on that quarterly basis? So just scroll down and let me know in the comments below, which is more important for you, monthly cash flow or that higher paying dividend stocks? Our first dividend stock with a 12.4% yield is the Double Line Strategic Opportunity Fund, ticker OPP. And if OPP doesn't mean anything else to you, you did not grow up in the 90s. OPP, the fund, though, uses 2 strategies: a tactical closed-end fund in income-producing investments like BDCs and other CEFs, and an opportunistic fund in bond investments. As opposed to the individual dividend stocks on the list, the strategy allows both fund managers to seek out that income yield wherever they can find it, amplifying the return with leverage. Now, just over 3/4 of the fund is in that fixed income segment, investing across different bond ratings, with the other 1/5 of the portfolio in that tactical income strategies managed by the River North team. The fund pays 16 cents a share, and it's a monthly dividend payer, so you're going to get that dividend check every month. Shares are up 17% over the last year, so not only that solid double-digit dividend, but also some price appreciation with this one. Orchid Island Capital, ticker ORC, is a mortgage real estate investment trust, or an IMREIT, paying a 12.8% dividend yield. And unlike other REITs that own property directly, IMREITs borrow on short-term rates to buy long-term mortgages, and then are going to use leverage of 2 or 3 times their capital to buy more of those mortgages. So then one of the most important things you want to look at in mortgage REITs is what's called the shape of the yield curve. Now that's the left chart here showing interest rates on treasuries from 3 months all the way up to 30-year rates. Now that's important because it's directly related to the profitability for IMREITs, being able to borrow at that near zero interest rates and then buy loans making 3% or more. And that dynamic is probably only going to get better for the IMREITs over the next year, with the Fed promising to hold those short-term rates at zero, but with the longer-term rates steadily rising. It's a big part of what's helped shares of Orchid Capital jump 67% over the last year. And while you shouldn't expect that kind of return every year, you can probably get some solid price return along with that dividend here as well. This is another monthly dividend payer, currently paying 6.5 cents a share, so you'll get that payout every single month for the consistent cash flow. We've still got 5 more dividend stocks to highlight, and these are going to be some of the highest yield in the group. But first, I want to personally invite you to join the Daily Bowtie, my free daily market newsletter with all the stock market news, strategies, and the trends that you want to follow. It's absolutely free, just something I like to offer for everyone out there in the community. So look for the sign up link in the video description below. Our next high yield stock here is an interesting one: DHT Holdings, ticker DHT, paying a 17.8% dividend. DHT owns and operates crude oil tankers with a fleet of 28 carriers and more than 8.6 million tons capacity. It's set up as a master limited partnership, or an MLP, so it can return the majority of its cash flow to its investors. Now, shares are down over the last year on that weakness that we saw in oil prices during the pandemic, but shipping should do well this year and next, and the shares are basically flat over the last 5 years, which means you got that full dividend return. Even on the weakness in oil, though, shipping prices for the carriers have stayed surprisingly strong at nearly 4 times the cash break-even rate for DHT. That cash break-even rate rose in the second half of last year, but was still well below the spot rates for shipping. Now, I like these MLP names, the Master Limited Partnerships for dividend stocks, and since most of those are in pipeline owners, it's nice to get a shipping company in here for a little bit of diversification. DHT pays its dividend each quarter, so you're going to get that dividend every 3 months on this one. Euronav, ticker EURN, is another tanker MLP and the first on our dividend list to break that 20% annual yield. Euronav owns 74 tankers contracted out on a mix of fixed payments and spot rates to give the sales a little bit more stability. The tanker market is currently facing an oversupply condition, which is weighing on those spot rates, but the company has a strong balance sheet with 2 years worth of operational cash, so lots of financial flexibility to see it through here. The order book for new ships across the industry is at a 20-year low, so that oversupply is going to clear itself out over time. Euronav is based in Belgium, so it's got that funky European schedule where you see sometimes with dividends. The company pays out twice a year, usually in May and September. We've still got 3 more dividend stocks to reveal, along with that cash boosting strategy. But I want to take a minute here to show you what to watch for in these dividend stocks, how to pick these stocks, and especially some of the traps to avoid. Now, first, you want to look at the stock's dividend history to make sure it's growing those dividends instead of cutting too often. Now, I'll use Yahoo Finance here for our example and click on the historical data in the menu. From there, I can change the date to look at the last 5 years and then to just see the dividend payments and click apply. I can scroll through, and it's pretty common for a dividend cut every once in a while from these high yielding stocks, especially over the last year during that pandemic. But what I'm looking for is that the dividend has grown over that longer term. If it at least hasn't done that, that dividend yield is likely to fall over time. Now, a gradually falling dividend isn't necessarily a deal breaker, but it is a bad sign, and you want to make sure that that dividend yield is high enough to start with, that even after a cut, you're still collecting a double-digit cash flow. You also want to just take a quick look at that stock price chart. If this price is flat, the dividend is all you're collecting, which is still pretty good for some of these high-paying stocks, but you also want to make sure that the shares haven't fallen too much over the last few years. Just 2 simple steps you can take to avoid a lot of the biggest problems in these high-yielding dividend stocks, but there's one more that I want to point out before we get back to our list. You'll notice a lot of these are either in business development corporations, that's BDCs, or those master limited partnerships, the MLPs. Now, I've tried to include a few other business types here, but just understand, if you're loading up on these high-yield stocks, your portfolio is going to be at risk if all the stocks in that industry or that business type fall on problems. Navios Maritime Acquisition, ticker NNA, and its 25% dividend yield is a more diversified play on the list. NNA is part of a larger group under the Navios name that owns over 200 ships and assets across the logistics chains, including ports, container ships, and dry bulk carriers. NNA itself owns 54 carriers, including 2 chemical tankers plus 7 container ships, so a little bit more diversification here from the oil fleets that we saw in those other 2 stocks. But still, the story here, like those other 2, is that oversupply condition in ships. So with these tanker stocks, you want to be watching the balance sheet to make sure they have enough cash available to pay off that debt as well as cover the dividend. Now, Navios has paid off $81 million in debt, about 7% of its total owed over the past 3 months, so that's always a good sign. Its 2021 business is already contracted at 38% fixed rate and 13% fixed with profit sharing, and 44% on those open spot rates. Now, the break-even rate for Navios is $16,700 a day, a little higher than we saw with DHT, but still well below those current spot rates. This one pays a dividend quarterly, so you're going to have to wait those 3 months to get paid. Next here, Magel Security Systems, ticker MAGS, is a leader in physical and cybersecurity solutions, paying a 26% dividend yield. And you can imagine that's a high growth market right now, and the company reported 23% sales growth in the 4th quarter on a year-over-year basis. Now, MAGS announced a split between its services and product division last quarter, and we'll probably see that close here in the 2nd quarter of the year. Now, the company just paid its first dividend last year, so we don't have a lot of history to go on, but it's got a strong balance sheet with $27 million in debt against about $3 million in debt, and that industry growth to push it forward. We're just one dividend stock away from that special strategy to boost your cash flow on any stock. But if you want even faster dividend payments, check out the video that I'm going to link in the description below. 12 dividend stocks for cash flow every single week. It's a 12 stock portfolio that will send you a dividend check every week of the year, so look for that link in the video description. And our highest paying dividend stock, Frontline Limited, ticker FRO, and its 27% dividend yield. And yes, Frontline is another tanker stock, but what can I say? These MLPs just pay out really strong dividend cash flow, but I don't think you need all 4 of them in our list. So maybe pick out the 1 or the 2 that you like the most for your portfolio. The company owns 68 ships carrying crude oil and refined products with a daily cash break-even rate about $18,200, which is a little bit higher than those other 3 tanker stocks, but still well under the spot rates. Frontline has about $413 million in balance sheet cash against $1.9 billion in debt, so a little more indebted than we've seen with these other stocks, but its new ships on order are already fully funded, and it's no material debt to pay off through this year or next. Dividends are also a little less reliable here, with just 1 payment in 2019, but 3 last year. Like most of these MLP structures, the company pays out almost all of its cash flow as a dividend or distribution, so when cash flow is good, the dividend follows. Now, Frontline is already our highest paying dividend stock here, and you'll collect $270 for every 1,000 invested. But now I'm going to show you a way to boost that by as much as 16% by selling covered calls against your stock. Now, you can do this with almost any stock, and it's a great way to not only increase your cash return, but also lower your risk. Covered calls are a strategy of holding a stock and then selling another investor the right to buy those shares from you at a higher price. The investor pays you a premium for that right, cash that you can pocket right now, and you get to keep the stock if that price doesn't reach the call price. I'll show you the basics of how this works here, and then link to a detailed video in the description below that's going to take you step by step into the process. We're here on the Yahoo Finance page for Frontline, and you can find this information on any investing site, but I'm going to use Yahoo here because it's a free resource. You first click on this options item here in the menu that's going to take you to all the options available for that stock. That page is going to show you the call and the put options available, and you can use this drop down to find all the months of options are available as well. You see here you can sell options that expire in as little as a month and all the way up to a year or 2 in the future. That's important because those longer dated options, you're going to collect more money, but you'll have less chances to collect that extra cash flow. On the other hand, if you're selling an option with just a month left, you're going to be able to do that every single month. I like using the January options here, so I collect more and don't really have to worry about it every month. So we'll look at these that expire in January 2022, about 9 months from now. Now note that the stock is trading at $6.75, and I can scroll down and see all the prices for these options. Since I want to have the best chance of keeping the stock, I'm going to pick one of these option strikes above the current price. So let's say that $7 strike price. That means the shares would have to rise by 4% by next January for the other investor to want to buy them off me for that $7 each, which the price of these don't move that much on these high-paying dividend stocks, so it's probably not going to happen. And if you look at that last price column, that's how much the other investor is going to pay me for each option. So here they're going to pay me $1.10 for each share of Frontline that I own if I use this covered call strategy. I get to keep the money no matter what, and that's an instant cash return. So $1.10 collected divided by the $6.75 that I'm paying per share, that's a 16% cash dividend that I'm collecting in addition to the regular dividends that I'll get with these stocks. Click on the video to the right for the 7 monthly dividend stocks I use to pay my rent. 7 stocks that are going to put cash in your pocket every single month. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.